Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, Michael Becker.
Hey, Paul.
And also today, James Eng. Hey, James.
Hey, Paul.
So in the podcast today, we have a property management company that we've known for a long period of time, and we wanted to kind of bend their ear a little bit about what's going on with property management. If you're managing the property, sometimes you have a second job or a third job being a property management company. What you want to do really, if you get to a size, you want to put your property in the hands of a professional third-party property management company. So we're going to bend these people's ears a little bit and have them tell us a little bit about what they do, maybe some industry secrets that they can let out. And we're going to talk to them a little bit about third-party property management of an apartment building. So today with me in the podcast and with the guys is Dawn Way. She is president of Citygate Group, and her partner is Patrick Smiths. And Pat has been with Citygate for a number of years. He has over 30 years of property management experience. Dawn has about 20-plus years. And I want to welcome them into the podcast, and we appreciate you guys being here. So thanks for coming.
Thanks, Paul.
So let's kind of kick it over to James. James, let's start these questions of some good property management companies.
Great. Thanks for coming in, guys. Maybe just, kick it off with how you guys got started in multifamily and then your transition into property management.
Well, I started in the business as a receptionist for a management company. I was actually temping on my way to nursing school, so property management pretty much found me, and then it bit me. 6 months into it, I was sold, and real estate was my direction.
Okay, that.
I started in the business while I was in high school as a summertime job, as a part-time job as a landscaper. And as I continued through school and into college, every time I had a break or a summer vacation, I would go back to the same 144-unit property in upstate New York and worked on it and didn't know what I really wanted to do. When I finished school, and I had this guy, a regional manager, said, well, why don't you go to work for us? And I went to work for them many years ago, and there's not a position within property management or real estate management that I have not done, from a landscaper to the president of an organization.
Okay. And then maybe talk about how Citygate was formed and why you guys formed it.
Well, I had a unique opportunity I had spent 5 years with a previous management company, and I was given a call from a company by the name of Nightbest, and they hired me as their VP of operations for their third party. About 6 months into it, they decided that they were going to sell the third party, and they offered the opportunity to me. And at first, I was like, well, that wasn't on my 5 or 10-year list. However, let me take it under advisement. And I brought it to the people that are mentors for me, and they said this is a chance of a lifetime. So I pretty much jumped off the bridge and took the swim, but realized very early on into it that I needed somebody that was more brilliant than I. And that's when I reached out to Pat Smiths, who then came along, and we partnered together. And partnerships like a marriage. It's the same thing when you're partnering in management. It's a marriage, and it's either good, it's bad, or you're in counseling. And from the moment that we met, we were like brothers and sisters. It was great.
So talk about when that was formed and then sort of the growth, sort of when you started to now.
Well, when we started, I started off with about 1,200 units, and it decreased from there, and then it started to increase because there were some owners who were nervous at the fact that we were brand new, although it was the same group that had run at Nightbest as it is that's running Citygate, and we haven't lost one of those people yet, which is amazing. We have very low turnover. And then we started to grow and brought it up to about 2,500 units when Pat joined Citygate. We were established on August 1st of 2014, and Pat joined us in January of 2015.
So what are the typical properties that you guys are managing, and what are people, if you had to average it out, I think you guys are up to about 10,000 units now in terms of size and then class A, B, or C.
So our typical middle of the fairway property is really a B-class property in the Dallas-Fort Worth Metroplex. And it is typically going to be 20 to 25 years old, and it's going to be 150 units in size, plus or minus. We really focus on the workforce housing B-class assets. We do have several A-class assets, and we have a couple of C-class assets. We typically look to partner with folks who have the same types of thought process that we do, goals that we do, objectives that we do, because we have found that when we can align our interests together, that we get to be more successful together.
So what's the best way for people, maybe they're looking at an acquisition, how do people interact with you on the front end of the deal? And then maybe talk through sort of your interaction at the beginning, middle, and then when they sell the asset.
So we get several calls daily of people who are looking to invest in multifamily real estate. Most of them are from referrals from brokers who we've done business with for years. Some are cold calls that are looking at an asset. They really might be their first venture into real estate investing, and they don't know what they want. They don't know how to underwrite a property. They don't know how to value a property. So that type of a investor needs a lot of hand-holding, a lot of guidance. We will typically do a brief assessment of the asset that they're looking at until they get to the spot where they are serious about it and about to write a contract. When they write a contract or go under contract, we will work hand in hand with them to create a pro forma, underwrite the asset for them, guide them through some of the negotiations with the seller and the brokers. Upon closing the purchase, we will establish a budget for them. We will, working hand in hand with them, we will establish their budget, work on that for as many years as they have that, or as long as they have that. And then when they're ready to sell, we will be side by side with them in their negotiations and optimizing the value of that asset so that they can realize their goals and their overall objectives.
A lot of these properties have, in that first year, there's, a large amount of CapEx on some of these properties that need to be done. How are you sort of managing that process, and what are you seeing in terms of the, what investments into these properties are giving you the best return in terms of rent?
So we approach that on two different ways. We have great relationships throughout the Metroplex and other areas with contractors that we have done business with for many, many years that will come out with us on a due diligence and look at the asset and evaluate capital needs and opportunities. There's deferred maintenance that we identify, and there's opportunity capital that we identify as far as what needs to be done, what has to be done to maintain the asset, as well as what opportunity capital there is to be able to build value in the asset. We also have an in-house renovation supervisor that also goes out and evaluates the properties to build that capital plan.
What are some of the specific things you see that have been a decent return on investment from a CapEx standpoint? Like, what are the top handful of things that drive the most rent?
I would say that changing out the countertops has been a huge success, adding backsplashes.
Like going from laminate to granite? You've been
Absolutely.
doing that?
There's some vendors out there now that do it cut to fit, and it's a lot less expensive than even resurfacing when you look at the long-term return of it. I think it's really noteworthy, too, to say that as we've grown organically, we've learned a lot along the way. Even though we came from larger companies and we had a great best practices in place, the truth is that as we've morphed, we've also learned a lot from our clients too, have taught us some things, and then we adopt it. So that was one of them. I was just at a property last week down in College Station, and that was the direction the owner's going, and I can't tell you how invaluable that is to be able to change out countertops. As simple as that sounds, it makes a big difference in a unit. But Pat's done some value add as well in his properties.
Yeah, so like many things, kitchens and baths are where you really see the most pop for the renovations, where you see the opportunity to increase. And whenever there's an opportunity where you can add an amenity to the unit, such as in-unit washer and dryers, are a big draw. It's expensive, and it's usually not real easy. But if you can find the opportunity to put in-unit washer and dryer, that's one of the biggest things that people ask for. They also are looking for amenities on the property itself. A big thing is the dog parks. The dog wash stations are very interesting. Anytime you can do anything for a pet people will pay handsomely for items that are upgrades that will deal with their pets, pet washing stations in the dog parks and such.
So when you guys go walk properties or evaluate with a client on a potential acquisition, what are some of the things you could look for like upside in the deals, or what are some of the obvious signs of mismanagement when you're looking at deals? Like the best property you ever bought had typewriter in the office and you have a computer, right? For example, do you have anything like that?
It's the 4 Ps. First, you look at the people. Who are the people on site, and are they engaged? The price, the product, and the promotion. And usually, if you can get all those 4 Ps working, you usually have a great asset. I love to go into a property where it's been owner managed because I know that I can help them enhance their operations, because there's things that we have as bench strengths, the marketing, the IT, that we bring to the game that a lot of owners won't have. We also get special pricing because we are close to 10,000 units now. We get preferred pricing from our vendors, and that really makes a difference. I was talking to an owner last week, and we compared prices between what he gets for paint, and he swore that his was the best, and guess what? It wasn't. And so we were able to bring that to the table.
So when you guys go through and maybe talk to you a little bit too about on the acquisition side, what are some of the things you guys do to help your clients out from a acquisition standpoint? So obviously, Pat, you mentioned a pro forma kind of going forward an operating budget. You guys do other due diligence services for people, and maybe explain some of the criticalness of the due diligence on the front end and kind of saving yourselves a lot of back end headache.
So one of the most important things we can do is to make sure that the potential buyer, our potential client or current client, has a complete understanding of the submarket that they're in, and that their expectations are aligned with truly where we can take the asset from a standpoint of a market will drive where that rent can go, the optimal rent that you can get. But it's very important that the potential owner understands the dynamics of that submarket, whether the schools and the shopping opportunities and the employment opportunities, and doesn't try to make an asset something that it will never be, and that we make sure that client is fully educated on the opportunities that are in front of them, the challenges that are in front of them, and fully understands what it's going to take to achieve those types of objectives, and that their objectives are realistic. Many times we have people walk through the door that says, we have been told that we must get 20% return on investment per year. We have to get it. And it's our job at that time to educate them on, that would be lovely if that happened. We'd all love that to happen, but it doesn't typically happen, and to bring them into reality and to make them understand what truly is or potentially will happen with the asset.
Can you talk about, I've walked some properties with you guys, and it's always nice to have 2 or 3 properties in that submarket already. And you guys have been able to say, we can bring this property up to this property that we're already getting, let's say $1.20, and your rents are $1 at the subject property. So maybe talk about some of these submarkets that you guys are in or have a large concentration in, and that you see maybe are turning or have improved significantly in the last, let's say, 2 or 3 years.
I absolutely love Waco, and I absolutely love Lake Highlands. I think Lake Highlands is a gold mine. And in a couple of years, as they finish doing their development, there's a bridge going in over Skillman and Ordelia. There's been such a change. They went from having one of the highest crime rates to then dropping off of that list, and I think that that's monumental. I've really been looking at that submarket for probably about 15 years, and I really believe that we're going to start seeing the fruit of the effort, and it's there now. I mean, we manage one of the largest properties there that's 1,500 units, and then the next largest, which is 1,200 units, and it's just a slam dunk. There's a lot of transition that's happened in that area, and it's all positive. And we just don't work with the owners. We always want to know what the owners' goals are. We want to know also, what's the city saying? What's the police department saying? We make sure that we engage with our council people. We go to council meetings, and we stay engaged, and it really helps, especially in areas like that where they've typically been issues with code enforcement and people coming in and beating owners over the head. We're there as liaisons for the owner to really, once you have a great reputation, people listen to you. And I think we've established that in those markets.
So, I think that East Dallas is a market that I really like a lot. I typically stay away from real central downtown types of locations just because of the rents that you have to get, and it kind of goes away from our focus of workforce housing. Of course, mid-cities. Who doesn't love mid-cities in the Metroplex? And I really like many areas of Fort Worth. I think that Fort Worth has sometimes gotten the stepchild approach, if you will, and I think that it's really starting to shine. Many submarkets in Fort Worth are really starting to shine.
Let's talk a little bit more about those submarkets, though, too. I mean, you mentioned Waco. Why do you like Waco?
There's a lot of opportunity there. I think for the longest time it wasn't awake, and now it's awake. Mm-hmm. And a lot of that has to do with like shows that are coming out of Waco, but then also great owners going down there and revitalizing the area. And that's made a big difference. And people never wanted to really test the market, and now we're achieving rents that no one else thought that they could achieve.
Now, will you guys, Mike brought up an important point on the front side of the transaction. You guys will help create a pro forma for the client. So, before they probably do an LOI to buy the property, you'll help them understand the metrics of the transaction. You'll kind of help them kind of understand a little bit more about, is this going to be profitable or not going to be profitable? How great a detail will you get into on that pro forma? You'll create it on a monthly basis so they can see it, how it's going to move based on what, Pat, you were saying about the buyer's expectations of how long they're going to own the property.
So I think that LOI point is a really good point to make, that once they really go and submit an LOI, prior to an LOI, we'll do a 10,000-foot evaluation of that asset. And that doesn't mean we're just going to say, yeah, we like it, it's pretty, it's in a good spot. We'll look at where the income has been, where it is today, and where we think it can go. We're not going to get into unit-type pricing. We're not going to get into subcategories on expenses. We're going to go kind of main category on expenses of where they should be and where we think that they could be based on our dynamics in the market, and give them an idea of where we think it should price out.
And then after the LOI, let's say, has been accepted, now what do you do?
So at that point, when they get into their due diligence period, when they get on site, then we get on site and we start to underwrite it at a much deeper level, a sub-account level. We'll go into all the other income sub-accounts. We'll go into the operating, the expense sub-accounts. We'll get a pretty detailed number of where we go with that pro forma.
And you'll call other properties too, kind of do a rental survey in the area and kind of compare what this whole thing's all about. Whether, let's say you have classic units on the subject property, and then you want to figure out, can I raise it by $100 or $150? You have something similar in the same submarket, and you kind of figure out, what do I need to do? Is that something you guys do?
Yes, that's more I spearhead those kinds of things, and the first thing I want to do is touch and feel the property. So even if I can't get in and do a tour, I want to drive it. I want to know the area. I want to see what it looks like and feels like, and then we do a sub-market study, so not necessarily what they comp out with, because if there's something that's sitting next door that's a 2000 product, but the property's a 1969, and the 2000 product's achieving 1,500 rent, I know I can't go over that with my 1969 product. So it's really nice to know what the whole area is doing. So yes, we do that.
So one of the things that I think James will probably agree with me is the biggest thing that we have is people that are not familiar with this area buying in areas that they probably shouldn't be buying in. They just don't know what they don't know, and hopefully you would be instructive to them, is be careful about this area. This could be a partnership killer if this thing is not done correctly.
I think it gets down to asking about what the owner's goals are and then making sure that they're realistic, because that's the most important thing. It's part of our vetting process to know, is this owner realistic about what they're thinking, Pat?
Yeah, so as we've talked about before, Paul, I own a number of assets throughout the Metroplex, and a lot of these people who are coming and looking in the different areas, they have the same type of mentality that I do, that they're looking for the same things. They just don't know where they're looking. And a lot of times the measuring stick is, if I'm not going to buy it, I'm not going to advise them to buy it.
That's right.
And if I don't believe in it and I don't trust in it, I try to educate folks that are from out of state or unfamiliar with the area of why I think that they might want to think twice about it and I'll explain to them where I'm coming from that aspect.
Yeah, I mean, I think that's an incredible value to people who just see the numbers and they think cap rates and they think rates of return. They think that these things, that the people who actually live in the market are stupid, and that they're smart and they're seeing the opportunity. Maybe they're the only one that has seen the deal. But the truth of the matter is that we're pretty damn smart here, and the locals are not buying it. So, hopefully, I know you guys do this, but I just want to bring it out. You'll advise them what are good
Absolutely.
areas or what are not good areas. And just like tenants, we do criminal and credit background checks on tenants in the property. Do you guys actually help on the front side of the deal? Also, maybe, and I don't know if you do it now or maybe you could do it, is do some crime statistics in the area too to kind of figure out, a block or half a mile or a mile away from the subject property, what are the crime stats? I mean, is it violent crime? Is it just high density crime type of stuff? Do you guys help them understand what the crime stats are?
The beauty of this area is that we do have all of that at our fingertips. Texas is amazing at being able to provide those kinds of things. So yes, we do that.
Going back a decade or so, what were some of the common reasons why you saw some of the people in the last cycle get in trouble from a manager's perspective? Were there any kind of common themes that you saw people repeat?
I would say from an operations standpoint is not being prepared to handle a disaster. To just have a model where it's just you want a certain return, that's fantastic, but you have to be able to weather a storm because something can happen. Let's say you have a chiller on your property. Let's make sure that the health of that chiller is there, because otherwise you are in a position where you could have a chiller go out in the heat of the summer and you are on one of the local news channels, and you don't want that, or to be misquoted, or to have to face those kinds of things, and it's very costly. We just had an owner, and fortunately, he had the bench strength to be able to handle it. But it was a $150,000 venture at the end of the day.
So people didn't have enough capital set aside to take care of maintenance, essentially.
Correct. Or they're focused more on getting the investor their return and less on really communicating what is actually going on. So we try to come in and give those answers to the investor. We really want to help the lead on any project or any investor that has to answer to other investors to be able to understand what's going on. We have a total transparency. They're not going to be shocked by their financial at the end of the month. We want them to know right along the way that, hey, we had to spend $2,500 for this, and they should know the health, and then we're helping them actually write their owner's report.
I think a common theme had been that a lot of owners had undercapitalized their improvement budgets. They didn't fully understand what conditions some of the properties were in. I would say that they overestimated some of the opportunities they had for rent growth, and they overpromised and had to underdeliver to their investor pool based on what they perceived as white-hot markets, which is a hot market, but it can just go so far. And I think that some people have pushed really hard on revenue growth, which if you don't have the top line, the rest just isn't going to flow. So I think that a common mistake that I saw was people being too aggressive on revenue growth.
Have you seen any softness in our market here in DFW over the last year or so? Because it's been, 7-8 years in this cycle now. 2010, I guess, was the bottom, so we're 7 years in this thing now.
So what I think that we're seeing is some softening from a couple of things. One is the massive amount of new product that's being built in DFW. Paul, you would know the number better than we would of what has come online in the past 18 months. But typically that's not going to impact us in the B-class arena. However, I think what it has softened up a little bit is from a sell side. I think you're starting to see a little bit of softening on the sell side on these where people are talking about best and final offers. And you're going to get in a bidding war. And I think people's offers now are their offers. When they get to best and final, well, my best is what I've offered you. From a rental standpoint, I will say that I think that I don't want to use the word sovereign, it's lightened up a little bit.
The growth, the pace of growth.
The pace of growth, because it was just so hot and it was so strong over the past several years that it just can't keep up that pace. And I think there's been a bit of a stepping back and a taking of a deep breath. And I think that some people aren't as willing to move to the next level of apartment, not to make the next choice to upgrade the next apartment. They're kind of staying put a little bit, so it's not pushing rents as hard as they were. It's not to say that we're not in a really good market, but it's not as white hot as it was even 8 months ago.
What about on the expense side? Anything? I mean, so the things I'm seeing as headwinds, we own a bunch of stuff. So taxes, everyone keeps getting crushed with taxes. I think I'm on my third hailstorm of the season. So my insurance went up from the last renewal, and I can only imagine what it's going to be like in a year because it's not just my property, it's the entire market. So I think taxes and insurance. Have you seen that? Are you seeing that in labor pricing or any other headwinds from an expense standpoint?
It's consistently getting harder and harder to find qualified maintenance people who will work for what the budget is. And we consistently hear that, the budget may be too high price per unit on the payroll side, but the reality is that you truly get what you pay for. And a lot of the success that people can enjoy is linked to the people that are the boots on the ground. So if you're going to invest any money, I would say invest it in the people that are there and don't try to shortcut that by trying to live by some $1,100 a unit. We're seeing, like through the National Apartment Association, that price per unit is about $1,300 a unit at the moment. And that's somewhat what we've lived by. And if we can get it for less, of course we do. But the reality is don't shortcut your manager by $5,000 a year, because that $5,000 is going to gain you so much more on an annual basis.
I would agree with that. And I think that aside from the taxes and insurance standpoint, which is really, in Texas, really hurting us badly, and that's not going to be relieved anytime soon. But I think Dawn's point of wages is spot on, especially maintenance. It's so hard to find qualified maintenance folks who will come on for some of the per hour wages that we have established. There's so many opportunities for them through construction and through other opportunities for them that it is really hard to keep these guys on board and to be able to control those expenses. I think other fixed expenses, utilities, they're pretty much staying the same and not moving too much. And the other admin, what we're starting to see a lot of is additional charges through software cost, whether it's a pricing model or just your property management software. It's starting to get more and more expensive.
Is there anything, you guys have been in this business for, 2.5, 3 years, especially in terms of Citygate. Is there anything that maybe coming into the business you thought, okay, this is going to be easy or this is going to be hard, but after being in it now for a couple of years, it's the exact opposite? Or
I wasn't really too surprised. I mean, I didn't know what the expectation was. I do owe a lot of my former bosses probably an amends because I used to think it would be so easy to be a president of a company or a CEO. And the truth is that when it's yours, you work. And it's really important. It gets back to that partnership, right? To find a partner that works as hard as you do. But I don't think that there's any surprises in the sense that we have really strategically tried to plan our growth and stay ahead of the curve. So we hire people before we have the ability to, not the ability to pay for it, that's not what I mean. We hire people ahead of the curve, anticipating what's coming. And that way we already have people that can touch the ground from day one. We really give a lot of attention to takeovers, and we inundate properties with training, which is really key.
Yeah, I would say, on James's point about being in the business, at least at Citygate, for a number of years, but Dawn, you've been doing this for 20 plus years. Pat, you've been doing it for 30 plus years. I mean, you bring a heck of a lot of experience and tribal knowledge and boots in the ground. And you, Pat, as you said, which I've known, you've wore everybody's hat. Kind of know exactly what's going on. So I would definitely think that that's a major asset. But now let's get into some of the knitting of what makes you guys successful. Let's just maybe throw out a couple of things. Social media. What are you guys doing to help your tenants and help your landlords about social media?
We've put a lot of resources into social media and into reputation management. We have actually people here at corporate that will also post Craigslist, will stay ahead. We're constantly scrubbing our websites. We're constantly scrubbing our our advertisement. We're making sure the feeds are working. All the things that when I worked at other places, I noticed were issues. It's almost like we've put our best practices together on all the things that we may have seen that needed to be fixed. And social media was one of them. And making sure that the people on site also understand it. And if they don't, giving them the training that they need. Or sometimes you just have somebody who just does not get how to post a Craigslist posting. So we'll take it up here and we'll post it until we can get adequate support.
So out of 10 potential tenants, how are they coming to you? How do they come in the door? Is it through social media? Is it through Craigslist? Is it through drive-by? I mean, you guys do this stuff as a science, and so you kind of know, how they're coming to you. How are they coming to you?
We've seen amazing success with Facebook. We have a lot of Facebook. We had to add it as a traffic source because we manage the Facebook pages, and it's really driving people to come. But we do work with our ILSs. We also have Yelp, and we just manage the whole package and make sure that all the information that's out there has integrity.
And what are you guys using for a software program for accounting and for the operations of the property itself? What do you guys use and what do you share with your clients?
So we are a Resman shop, which is relatively new on the scene. They've been around for several years, but they've really just begun to get a foothold in the industry. We came out of one of the two larger ones that we switched from, and we have found that Resman is phenomenally easy to train, really easy to use, really easy for people to become really proficient in, and it's very cost effective compared to some of the more prominent ones. They are able to provide essentially the same type of back office reporting. They're very accommodating for if we need a customized report, they're very accommodating on that. They also have a very open platform for integrations from other providers, whether it's a billing provider or a screening provider or a collections provider. They have a very open platform and are very easy to work with.
Landlords, the people that you work for, are very happy about having that system?
Yes, and we give full access in the sense that they can see everything. They have read-only rights, but they see the same things that we see. You just can't post rent. They can't post their own bills, but they can see everything that we're doing in real time. So if they want to look at what's in the bank account, they can pull it up.
Isn't that amazing? With
It is.
the technology today that you can stay on top of what's going on in your business on a day-to-day basis. Mm-hmm. I'm going to kick this over to James in a second, but I see if we talked a little bit about reputation risk and these transactions. Sometimes you take over properties that are broken properties, and now you got to put them back together with a new ownership group. How tough is that, and what do you guys do to fix a deal?
Well, I think you won't find any of us here at Citygate short on passion. It seems to be our gift set, actually. We have some properties that we've taken over where they weren't broken, but there are some that have been, and we just work at getting to the bottom of what's broken, and it goes back to that 4 Ps that I mentioned earlier, which are the people, the price, the promotion, or the product. And if you walk your property and you look at every single apartment that's vacant and determine a plan for it, if you find out, what is the best medium for that particular property, some owners swear by Craigslist, but the truth is there's some markets that you won't get anybody from Craigslist. What's happening with the people? Are they passionate too? And a lot of times when we take over properties, we don't like to clean house. We really want to train people. And I think it gets back to our core value of relationship and our core value of we want to take people that want to be in this business and make them the best that they can possibly be. I want them to take my job at the end of the day. I want them to be who I am. And I started in this business as a receptionist, and I tell that to our receptionist here, and she gets all excited because she thinks in 5 years she's going to be me. But it's just a great business to be in.
Any advice for maybe how to work with a property management company specifically, or just any advice for people who are just getting started in this business?
Trust is the core of any relationship. And if you can't have trust, then you really can't have a relationship. So then trust is earned. At the same time, there has to be that initial, I believe in you, you believe in me, and let us do our job because we do it well.
And what will fire you, not you, but how would you fire a client?
I'll give that to
Pat.
Pat.
That's a great question. So I really feel that Dawn hit the nail on the head where trust is very important. And somebody has decided to engage us because we have impressed upon them that we have the knowledge and the skill set to be able to take care of their investment and their asset. When it comes to the point where that client will not allow us to do our job and their actions are interfering with what I believe to be the success of the property, and it becomes detrimental not only to them but to us, it's time for us to go different ways. We have said many times that respect is mutual on both sides of the equation, and we will not allow any of our associates to be mistreated or beaten up or just taken up so much of their time that they can't pay attention to their other responsibilities. And there are times where a 10% of our property that represents 5% of a regional manager's portfolio is taking up 90% of his time through excessive phone calls and excessive emails that they're just redundant, that you just have to say enough's enough.
Yeah, enough's enough. And I'm a big believer in letting the professionals like you guys do what you do best. I mean, some of these new property owners who've never done it before can kind of step in their own problems. Mm-hmm. And so let the professionals do what they do. Out of the 10,000 units that you guys have, how many are out-of-state ownership groups and how many are in-state, just like as a percentage?
The vast majority of our owners are in-state. We have, I'm going to say that we have
about 40%?
40%.
Out of state, I think?
That would be a high number. I think that 40% would be out of state. Well, we've got one very large owner that is out of state. So that's about right. Yeah, 40%. But one very large owner is out of state.
I mean, we've seen you guys do a great job on these properties the last 3 or 4 years. And, especially for owners who, maybe this is their first or second property, you've really taken it up a notch. And so we've seen that not only, on the front end on acquisitions, but then also when they've come back and now they're, selling these properties. So congrats on that. Is there any specific maybe success stories that you want to share with the audience in terms of a property or maybe an owner that you worked with?
Sure. Yeah. We have a great example of a property that we took over on December 31st of 2015. Mm-hmm. The day that we took that property over, we had a rent roll of about $800,000. 18 months later, the property was able to be refinanced with a rent roll of approximately $1.3 million in 18 months. So, it's a true focus that we have. It's a attention to detail. It is leaving no stone unturned and being very committed to partnering with these clients. And many times we do partner with them, not only from a management standpoint, but we believe what we do so much that we often co-invest with them and we align our interests with them. And I think that that's what helps us, not only in the assets that we co-invest with, but every asset that we manage as if we own it. And the regional managers, actually, it's interesting that the regional managers, many of them wouldn't know which assets we co-invest in and which ones we don't, because we don't want them to say, we want to play favorites for this one and that one and this one. And every one of the assets is run as if we own it or we have an ownership interest in it. And I think that that's what really allows us to optimize the values of a lot of these assets.
No, that's great. If people want to reach out to you, what's the best way for people to reach out?
Either through our main number, 972-979-1442, or you can go to our website, and we have info@citygatepg.com, and then you can also find our emails there and our contact numbers.
So, Pat and Dawn, thanks for hanging out with us. We appreciate your time. We like you guys so much that we want you to come to our conference and talk a little bit about multifamily management. And so that would be wonderful sometime in October. We'd love to have you guys come to that conference. We appreciate that. Michael, anything else coming up in the Old Capital Group?
So like you mentioned, October 5th at the Addison Convention Center, we're going to have a conference. It'll be an all-day conference, I think starting at 10 or 11 in the morning, something like that. And then if you like this, we certainly appreciate a rating and review on iTunes or Stitcher, and maybe you can go to Facebook and like our Facebook page. I saw the other day, Paul, that we're number 63 in the business category in the iTunes, which was pretty amazing.
Yay, 63. We're almost there.
Well, considering there's thousands of them, I thought that was pretty cool. So we don't normally haven't shopped the rankings too much, so I thought that was pretty cool. And you can find out more information about us at oldcapitalpodcast.com. Our website. You can certainly find our white paper, 15-page kind of multifamily financing 101, as well as the sample due diligence checklist that we have when you put an LOI together.
Sounds great. Thank you, Mike. We appreciate Pat being on the podcast. Dawn, thank you very much. James Eng, always a pleasure. Michael Becker, thanks for your time. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.